Good morning, ladies and gentlemen, and welcome to the first of a series of 5 sessions that we will be running from the Institute of Hospitality during the show, 2 today and 3 tomorrow. I'm Philippe Rossiter, I'm the Chief Executive of the Institute of Hospitality, and for those of you unfamiliar with what the Institute is and does, there's a little brochure on your seats. We're the professional body for managers and aspiring managers in the hospitality industry. We've been around for over 70 years, and we have members at every level, some of the most senior members of the industry. Some of those are on the panel today, and we range from hoteliers to restaurateurs, contract caterers, people in the public sector, and quite a few academics. And we have a lot of links with the international community. We have a number of our members, 15% of our members outside of the United Kingdom, and we're very heavily involved with educational establishments both in the UK and internationally. So that's just a brief background for what we're about. And as a professional body, our 2 main objects are the promotion of best practice and the advancement of education. And that's the underpinning reason why we're here, supporting the show with these seminars today and tomorrow. And I'm not going to steal any more time because we have a sort of packed programme, and I know that the panellists here are very keen to get started. I'm going to hand over to Russell Kett, Fellow of the Institute, who's the Chairman of HVS International, and he's going to be chairing this particular session. So over to you, Russell.
Thank you very much indeed. I'm assuming this microphone is working and that everybody can hear me. If someone at the back could just wave to me to... Ah, yes, now I can hear myself coming back. Good morning, ladies and gentlemen, and thanks for coming in such great numbers. I'm delighted to be chairing this session. I'll talk about it in a little bit of time, but first I wanted to make sure that you knew who our 3 panelists are. We have apologies from Lawrence Geller, who unfortunately was stuck in Chicago, but he sends his apologies and can't be with us today. But we do have, nevertheless, 3 of the most dynamic people I know in this business. On my immediate right, Sir David Michels, who's president of the Institute of Hospitality. He does that in his spare time. His day job involves anything from being chairman of Michels and Taylor, the well-known asset management firm, to being a director of strategic hotels and resorts, the Savoy Hotel and Jumeirah Hotels. That's sort of Mondays and Tuesdays taken up. We'll probably hear what Wednesdays, Thursdays and Fridays happens to him and what he gets up to then.
Go to the races.
Go to the races, there you go. Go to the dogs, probably. Next to him, on his right, is Arthur de Haast, the global chairman of Jones Lang LaSalle Hotels. Been in this business about the same time as I have, although he looks 10 years younger. Obviously enjoys the good life. And to his right, on the far left of the panel, is Patrick Fitzgibbon, who's the Senior Vice President of Development for Hilton Worldwide. What he doesn't know about developing hotels ain't worth knowing. So a great panel, and I thank them on your behalf now, because I shall probably forget to do so at the end of the day, and hopefully they will have earned their fee of answering questions and dealing with issues that we're hopeful that you, ladies and gentlemen, will have the opportunity to ask. I don't want anybody leaving this session today without feeling that they have not had the opportunity to ask the burning question that's on your lips. I'd prefer it if we could stick to the topic, and the topic is: what initiatives should hotel investors and owners be undertaking now to stay ahead of the game? That's the title that we've been given. So if we can start by staying on track with that, I'd like to do that. But if there is anything that you would like to ask of any member of the panel, including myself, then we'll do our best, providing it's within our comfort zone. And if it isn't within our comfort zone, no doubt 1 or 2 of us will have a go at bullshitting an answer. But the real real important thing is to get across to you the answers to any burning questions which you may have. So please feel free at any point in the proceedings to raise your hand. I'm hopeful that there is a roving microphone available to pick you up, because this session is being recorded. I gather it won't appear on places like YouTube or Facebook and things like that, but recorded for some posterity somewhere in the world. Without further ado, I've asked each of the panel to kick us off with a brief, and I suggested that brief means around about 3 minutes, a brief initiative which we'll start off with, and then maybe take some questions relating to that if it's appropriate. So Arthur, you're first in the alphabet as far as first names are concerned, so please kick us off with one initiative that you feel hotel investors and owners should be undertaking now in order to stay ahead of the game.
Well, we're at the moment spending a lot of time talking to banks who have, especially here in the European region. The best advice I could give anybody at the moment who has a hotel investment or is contemplating a hotel investment is to make sure that you have very good relationships with your bank. Keep them informed of what you are doing or what your plans are. If you are facing difficulties from a cash flow perspective or any other issues, it's best to let the bank know at an early stage, keep them involved. Otherwise, you are likely to run into many more problems than if you have kept the communication going. So at the present time, as I said, finance is scarce. So even if your operation is running well and you don't have any cash flow issues, but have a refinancing due, for example, in 6 or 12 or even 24 months' time or whatever it might be, it's still good to keep a good dialogue with your bank to be sure that there is every opportunity that they will continue to support you, whatever the circumstances are. So that would be my first piece of advice. Lots of other things, but that'll be the first bit.
Excellent. It probably might be helpful for us if you could practice the art of interactive technology. Does everybody know the meaning of the word interactive? I'll repeat. Does everybody know the meaning of the word interactive?
It's quick, wasn't it?
Yeah. Okay. So raise your hand. This is a hand. Raise your hand if you are at the moment a hotel investor. Thank you. You can lower it. Who's an operator? Any operators of hotels? So any operators and owners, you can keep your hands up. Okay. Anybody developing hotels? Excellent. Any banks? Way, there they are. The lone bankers. Any people who advise?
Just say that slowly.
Yes, I did. Yes. Those who advise the sector. How about people who teach the sector? Any educators here? Architects? Consultants? Lawyers? Any other vermin? Okay, who have I missed? Anybody feels that they have a role here?
General finance geeks.
General finance geeks. So.
But we're from the view from the Shard.
From the Shard?
Yeah.
Wonderful. Wonderful. And sir, you?
Airport regions.
Airport in the regions. Okay.
Airport regions.
Airport regions. Okay. Thank you. So we've got a mixed audience. Therefore, hopefully something for everybody rather than nothing for everybody or nothing for somebody, whatever the expression is. So we've got a couple of banks there. Was that good advice, the two bankers? Okay. Who's not done? No, I won't embarrass you. Patrick, kick us off with your first point.
I think the only group you didn't ask for, which is really, I think, critical to the success of any hotel today, is customers. And I think one of the things that we all have to do is stay closer to our customers than probably ever before. And I think things like TripAdvisor, and I saw their booth downstairs was pretty busy, has changed in many respects the way we interact with our customers, or has certainly presented a new opportunity in terms of the way we interact with our customers. And I think more than ever before, as a hotelier, you can find out what your customers think about your product pretty much as they're in your product, but you can also find out what they're doing on our competitors' products. So there's more transparency around our sector than there's ever been before. And I think for us, it's about staying really, really close to our customers and make sure we're delivering what they're expecting, maybe delivering to some extent what they're not expecting, so they'll come back and stay with us, and we'll maybe talk a little bit about that later on. But if you don't stay close to your customers, many of our competitors will. So I think in summary, Russell, that's probably almost the most important thing we'd say today.
Okay. Any observations from members of the audience? Any questions that you have either to that question or to Arthur's prior to that? Feel free to join in the discussion if you wish. Yes, can we get a microphone to this young man, please? On the aisle, 7 rows back. Tell us who you are if you can.
Yes, so my name's Sam Bryan-Merritt. I own a new company called With Compliments, and we're sort of in the hotel tech space. I mean, it was going on further from what Patrick said, actually, about being close to your customers. And all I wanted to ask is, to what point does technology play some involvement in that stage?
Well, you mentioned TripAdvisor, didn't you?
That was card 5, actually. We're going to get onto that, but I'll get straight to it. Apple have sold 100 million iPads since its launch in 2010. They expect to sell another 100 million by this time next year. It's fair to say that the way our customers interact with us has changed in a way that none of us could ever really have imagined. And so technology is something that you cannot ignore, and you ignore at your peril. And I think the difference today is that maybe 10 years ago, hoteliers would drive product to customers. I think today our customers are telling us what they expect, which is driven by just everyday technology. What my kids use today is terrifying. I have a 2-year-old who knows his way around an iPad. His mum still doesn't. And I think that to some extent shows us what's coming. And I think that you can never move away from the service that we deliver in the hotels and the personal touch, which is always going to be fundamental to hoteliering experience. But ultimately, I think technology is going to change our world and continues to change our world in many respects in ways that we can't imagine. And I think what Apple are going to do in 5 years, I mean, if you think 10 years ago, the iPad was something that probably nobody really thought about. And I think so it is fundamental to the future of many businesses. And it's about how you engage and what the opportunities it presents itself. So yeah, I think it's mission critical.
I totally agree with you. All I would say is a plea. Please don't forget the Luddites, those who are perhaps older than the average, for whom technology isn't so familiar. I think you have to go down both tracks, if nothing else, just to make sure that you're keeping all your customers with you. Any other observations, questions, or otherwise, either on the first or the second contribution? Anybody want to talk about banks and raising money? Where do I get any? Yes. There's a gentleman with a rather lavish bow tie, who we see for the 3rd year running in this. I can't actually claim that there is nobody else who's been to this seminar 3 years on the trot, but this gentleman certainly has. Oh, and this lady. Yeah. You don't wear a bow tie or a ponytail, so. Go ahead.
Thank you, Russell. I'm surprised you haven't got a banker on the panel this year, although I hear a colleague from the last 2 years has moved on. But generally, as in the housing market, and certainly some of the developers in the residential space are finding some access to funds easier, or should I say, there is more around for the right project and the right time, etc. Generally, do the panel think that that is also true for the hotel sector? Because it still seems, I would say, a little bit simpler or easier than last year, but still not easy depending on your bank. And some of it isn't coming from banks, I've noticed.
Yeah. Arthur, do you want to kick us off?
Yeah, I think that the overall financing situation has eased a little bit over the last 12 months, but hasn't fundamentally changed. You're absolutely right. There are a much broader range of debt providers out there than there were 12 months ago, particularly with some of the insurance companies coming in, the likes of AXA, Allianz, and so on, who are willing to do senior debt. There are firms out there, debt with debt funds, who will do mezzanine debt now. LeSalle Investment Management, our sister company, has got a fund that does that, Starwood Capital and others. So the range of debt providers is slowly broadening out, but everybody is still pretty cautious, risk averse, so it's still pretty hard to get financing out there. And I think it will remain so for the foreseeable future. I don't see anything that's going to change significantly in the next 12 to 24 months that would suggest otherwise. David.
Morning. It's nice to be here on British summer. Those of you from abroad, this is summer today. This is the first sunny day this year. It's not a sunny day for the banks, and basically, in my view at least, and from a lot of experience, the banks are trying to get their money out of hotels and back to making themselves a little bit more competent as bankers. The kind of people the money is coming from, I agree with you, Arthur, but they have more than a risk than banks do. Because banks don't want to own your product. The kind of lenders that are now lending, if you default, will want to own your product an awful lot more quickly. So it's not quite like taking money from the devil, because that's not fair. But it is taking money, ultimately, if you slip up, from people who will be far less hesitant and far less reluctant to grab your asset quite quickly. When you read the small print of all these investors, they're there for a longer term and for a different purpose. So I think we will see in 5 to 10 years' time the result of the kind of lending that is going on today, and its results will be far quicker than the banks, who are slow for good reason. Different world. The main thing, by the way, when you lend money for a hotel, it's kind of obvious, but I can give you at least 10,000 instances where it hasn't been listened to, is don't lend it if you can't pay it back. Therefore, lend as little as possible or don't lend it. Hotels notoriously and repeatedly have been unable to pay back their debt, and there are thousands of examples of that around, not just in this country.
Thank you. David, why don't you continue, and we'll change the focus onto your first topic.
I mean, the funny thing talking about hotels is you're actually in the hotel business. I'll borrow your microphone if I may. Thank you. And we all talk about money and how to raise it, which really has very little to do with how successful a hotel is. I mean, yes, the rate you pay, but they're pretty fixed depending upon who you borrow from. And the main thing to do is to find out if you can pay the money back, and to pay the money back, you have to make money out of your product, which I think really should be the main aim of any hotelier or anyone thinking of lending money to a hotel. It's a highly competitive market. Oh, what a surprise. Let me tell you, it has been for the last 60 years. This is sort of competition in this business isn't new. It's a growing market so much as there's always more customers around. But unfortunately, people like Patrick always make sure that there's more hotels around for those customers. What you have to do as a hotelier is look for the things other people can't. And that is regardless of whether you manage it yourself, or whether you have a flag, or whether you have a franchise, or whether you have a management contract or a lease. And that is to look at your own piece of real estate as a piece of real estate. What can I do to the bar that is different? What can I do to the restaurant that is unusual? Do I need a restaurant? Are my conference rooms being used as conference rooms, or should they be used as old age homes, or should they be used as retail? What can the front of my hotel do that it's not doing that the customers don't need? Everything in the physical asset of the hotel that may not be daily used as hotel space. It's not original, but it is extraordinary how people sit with the same building and just repaint that same building every 7 years, or perhaps these days every 17 years. But regardless, simply leaving it. No retail business you've ever watched, seen, or been into leaves the retail shop the same 10 years later.
Well, they did.
Everything in that retail shop has moved.
They do, Woolworths, and that's why they died.
Well, okay, fair enough. Thank you for that. That seems a good place to end. We do duets. We're hireable at £9 an hour.
Thank you. Does that provoke any questions from members of our esteemed audience? Yes, sir. Can we get a note? There we go. Thank you.
What investors are looking for is a way of comfort. I mean, the standalone hotel is a model in a great city. Has proven itself, as you say, as something which might be of a risk for lenders. Do you think that the mixed use are going to be the next thing to happen in major cities in Europe?
I have to ask a question. I apologise. Help my do you mean mixed use by apartments and hotel, or something else?
apartment or or offices?
I reckon that 50% of all the big hotels built until about 3 years ago were only built because they had apartments, timeshare, fractional share. I'm talking worldwide rather than the UK. And the flats, apartments, houses, rentals paid for the hotel bit, and everybody was very happy. Those days may not be over forever, but I think my co-panelists will agree they're certainly over for the moment. Offices don't seem to have worked historically, and as a cornerstone for a major shopping mall, maybe. But the only true mixed use which has brought in real cash has been the timeshare ownership, and they're not selling very well at the moment. So I think people will think of new things, but I certainly for one can't think of anything that's new, but maybe these guys have seen something in their travels.
Patrick, how about you?
Yeah, I mean, I think it's one of the unexpected locations I would kind of highlight as being something that hotel development has moved. I mean, we just last month I was lucky enough to meet our future king and his wife, who came to open the St George's Park development, which the English Football Association have built in Burton, which is a huge facility. And given the way that we play football in this country, and particularly the way we take penalties, it's a facility that's been long overdue. And we've put as part of that development as a Hilton and a Hampton by Hilton to something for the upscale segment, but also for the economy segment. Now, that as a hotel was not built as a standalone hotel. It was built as part of that mixed-use development, global leading sporting venue. We also reopened a brand new Hilton at Wembley Stadium, again right next to major sporting venue, major entertainment venue. We signed a deal a couple of weeks ago to build a brand new Hilton at the Ageas Bowl in Southampton at the cricket ground. And we, a couple of years ago, opened the Doubletree by Hilton Milton Keynes, which is in the football stadium. And on match days, all the suites, or the bedrooms, a significant number of them, become hospitality suites for the football. So I think there is a real change in direction in terms of hotels not just being standalone hotels. We just signed a hotel, I was talking to a couple of people earlier, in Istanbul, an 830-bed hotel which we signed last week, which is actually built at the old beer factory, which I particularly like because it's in the beer factory. But they're going to build, there's a museum there, an art centre there, a raft of restaurants. It's a destination in itself, and I think you'll see more and more of that. Hotels cannot just stand alone, and they need to think about what's their core business.
Patrick, let me just be a bit difficult. The owners of the football stadium, the owners of Wembley Arena, the owners of Brent Cross Shopping Mall love a hotel. They're great things to have. It's very odd that in most cases it's not these owners who put the money in the hotel, they get some other chump to do it. I know that the Wembley Stadium Hotel is for sale.
It is for sale,
right?
But they developed it.
So there's every reason in the world why everybody wants a hotel everywhere, as long as they don't actually have to own it. I'd like one at the bottom of the road because it'd be convenient to get a cup of coffee, but at the bottom of my road it wouldn't have many customers. So what about from that angle?
Well, I think some owners do own. I mean, the FA own the hotels there. Wembley are selling the hotel, but that's Quintain's model. They're a developer, so it's not surprising that they will sell it. Ageas Bowl, they will own the hotel long term. I think it depends whether you're a pure developer looking to build and develop and sell the hotel for profit, or you're looking for long term. Hotels are cycled. We know that. That's what Arthur makes his living on, cycling hotels, and ultimately they want to see that happen again. So I think there are both markets.
If you look at, I was in China last week and saw a dozen different hotel developments, and every single one of those was in a mixed-use scheme. For full-scale, full-service hotels, that is pretty much the model that is used in all the fast-growing markets now, India, China, Brazil, etc., where you've got usually a retail podium, and then you'll have 3 or 4 towers, one of which would be a hotel, one is going to be residential, a couple are office, and that is the model that is used, and it enables the developers to have a diverse range of income, different ways of, different cycles for office versus residential, the ability to sell off the residential to recoup some of the capital to begin with, and so on. So, it's a very successful model in those markets, and has, I think it will continue to be. The challenge in Europe are twofold. One is finding sites big enough in good locations in cities. Most of Europe's cities, you just cannot find sites of any scale to do that kind of thing. So, you look at some of the hotels that are transacting in London, people are looking at sort of converting, or adding maybe a floor with 10 or 12 apartments or something, but that is about as far as it goes. Or as Sir David was suggesting, looking at your reception area or your meeting rooms and trying to work out if they're being fully utilized, and if they have a street frontage and you can convert that into retail, that's probably a sensible thing to do. So that kind of thing, but it's at a very different scale. And secondly, planning legislation in most of the European markets do not allow for that because it's so out of date. So if you want to change of use from residential to hotel or from office to hotel or whatever, there are usually a lot of barriers out there that prevent that, and to try and get a mixed-use development, there's a lot of legislative barriers to that as well, which is a real challenge, and is reflective of our very ancient planning legislation and lack of movement by the politicians to keep up to date with what's happening in the world. So that's another factor.
Okay. Just on that planning, I just came back from Istanbul last week, and they announced on Saturday that they're building the new international airport in Istanbul. 130 million passengers, 5 to 6 runways. They will build that in 5 years. We will still be talking about adding a runway somewhere in England in 5 years' time. And they're the sort of things that ultimately we have to deal with.
Maybe they'd be kind enough to build one for us while they're doing it.
I'll be honest. Well, it's interesting is that the guys who are building our hotel are also building the third bridge across the Bosphorus and 60 kilometres of motorway. And they won the contract to do that. And I said, how long will it take you to build it? They said about 28 months. It would take us 28 months to design the bloody thing, never mind build it and open it. And
you want Erdogan as your prime minister?
Well, I tell you, maybe that's exactly what we should do. But it does demonstrate, and in terms of competing, if you're going to invest anywhere, I know Turkey got investment grade rating yesterday, which is fantastic. But it is about where do you develop hotels, where it's easy to drive and grow business. London will suffer unless we sort out the situation with airports. It just will. We know that. And yet you see cities like Istanbul, and if you're a major planner, meeting planner, organizer, and you're looking for destinations to go that are easy, Istanbul is going to grow and grow and grow in terms of its importance in the European arena.
Okay, gentlemen, in the middle, can we get he's holding his glasses up. Can we get a microphone to him? And there's somebody over here who's waiting as well. So we've got 2 questions lined up. Who are you first?
I'm Peter Phillips. I represent the Airport Regions Conference, which isn't a conference at all. It's an association. And it's an association of the regions around Europe's main hubs, and is a membership of the senior politicians and senior officials in that arena. You touched on planning. It's an area where our members want to see reform. How is it possible to engage with the hospitality industry across Europe in order to get such change, and what changes would you highlight are necessary?
Yeah. It's interesting that you should say engage with the hospitality industry, because I'm not sure this, I'll kick off. If anybody wants to jump in, do. If I was looking to change planning law, the hoteliers or the hospitality sector will have a view. The problem with it is it's quite a small body and doesn't really have the weight that necessarily the politicians are going to take notice of.
For our association, hotels and airport access, etc., are absolutely crucial, because the lives of the cities like Barcelona and Amsterdam, etc., depend on their airports. So we would regard you as an extremely important group.
There was a meeting last week. There was a meeting last week between leaders of the hospitality industry, all aspects, and the Secretary of State last Tuesday. The hospitality industry does an awful lot because ultimately part of its income depends on incoming tourists. Part of it depends on local ones. It's pure self-preservation. So it's shouting very loudly about a 4th, 5th, 6th or 7th runway, whatever you want to call it. And it's shouting very loudly about airport taxes and airline taxes, which are equally but differently detrimental. It's very hard to shout to a bankrupt government, but the hospitality industry is doing its part. General planning is really, the hotel industry is not going to be listened to. Political things like airport taxes and the 5th runway, it is certainly shouting as loudly as it can as an industry. I know I was there. You are, for our selfish reasons, well represented.
Thank you.
The gentleman over here, can we get the mic over here? Please. Those of you who've yet to ask a question, please think of one. As I said at the beginning, we don't want you leaving here without that burning issue that you came in with not being raised.
It's new rules from the Institute. You can't leave here unless you've asked a question.
That's the president for you. I couldn't possibly say that.
My name is Jeffrey Simon, developer. We've touched on several themes so far: mixed use, size of site, planning permission and associated problems, and also intrinsic opportunity for developments. My particular interest is an opportunity in West Africa, in a stable country. My question to you would be, taking all of these prerequisites into consideration, how would you see the opportunity for a decent West African country for investment?
Go on, Patrick, kick us off.
Thank you,
there.
that's very kind. We're very focused on
You were there
Africa.
3 days ago, weren't
Yeah,
you?
it was. Yeah, we opened a new hotel in Namibia, in Windhoek, first major international hotel in there last year.
That's not quite as
No,
west
let me
as
explain.
these.
Let me explain. Hotel will do just under 80% in its first year of trading. Just demonstrates the capacity. I think West Africa's, and there are many countries in West Africa, I'm not quite sure where, we've operated a hotel in Abuja for many years. In fact, David will, I may well remember signing that hotel 60 years ago, I'm not sure. But he certainly knows the hotel very well. But I think in those markets, it's notoriously difficult to develop hotels, but I think if you can get them developed and open, they do extremely well. And so it's a risk profile at the end of the day. But I think if I was investing my capital today, you know, it's a market, depending on your approach to risk, it's a market with a lot of opportunity.
My real question was opportunity to find the development, the backers, the people, the investors who would take an interest in these kinds of opportunities, as distinct from ones in Europe or anywhere else.
I can only use history, and the one in Abuja, and we in Hilton had 20 what we always called stable African countries. We turned out later to be incorrect, but the hotel survived, even if the governments didn't, which is important and relevant. But almost everyone from my memory that was started in the 50s, 60s and 70s were somehow government-backed.
By local government?
By local government, regional government, or the country itself in most cases. And not just in West Africa, by the way. If you look to some parts of Europe, 50s, 60s and 70s, the first hotels in most major cities outside of London, Paris, New York, where private developers did it, were in some way aided by the local government. One thing that is traditional is that most governments, regardless of their political persuasion, do actually like hotels. Indeed, many started their career in hotels. We used to say, when the old revolutionaries used to come about in the 50s and 60s, including Fidel Castro, there were two places you had to go to. The first was to capture the radio station, because there wasn't television in those days, and the second was to get the Hilton as your headquarters. This is really true. But it does come back to the fact that once you've got local government involved in some shape or form, not necessarily for 100%, then getting banks, developers, agencies, UN agencies, even private developers, with the fundamental backing of the government, those steps become very much easier, historically at least.
I think times might have changed a little bit. What I'm finding is that governments have no cash for getting involved. Certainly in African countries, they can give land, and they're doing
That's cash.
Yeah, well, of course.
Yeah.
They can give huge support. I think there might be a little more stability in some countries now.
I'm sure you're right.
Okay, moving on. Can we get the mic down? This gentleman here, please. Sunbathing in the autumn sunlight.
Thank you, Russell. It's Richard Barnett, International Leisure Management. Must get my question in so we can leave at 12 o'clock sharp. Some sympathy with this gentleman that's spoken about West Africa. I've done quite a lot in West Africa recently. We're putting a hotel together, a Hilton in Sierra Leone, another hotel in Ghana, and 5 in Nigeria. None of these hotels are being financially supported by government or European banks. Most of the funding tends to come from African banks, African development banks. The Sierra Leone hotel is being funded by Afrimex, which is, you need a PhD to understand the process, but when you've got there, it actually works. It's quite clever. We are finding interest from private equity firms in Europe, primarily because in West Africa, I can put 18-20% IRR to a project against 4 or 6 for a similar project in Europe. So PI funding is coming in. Question is, when will European bankers wake up to the strength of the market that Patrick alluded to? One is very careful, David, about stability of West African markets, but they are now pretty stable. Okay, Sierra Leone has been through 2 democratic processes in terms of elections. The Gambia hasn't had a revolution for 25, 30 years now. We are reaching the stage where West Africa is stable, is secure, and I think warrants a little more interest from Europe.
I think if you're waiting for European banks to wake up to that opportunity, you need to make sure that your grandchildren are well briefed. I think it will be a long time, before the European banks have sorted themselves out with their more domestic issues. Secondly, that they're then enticed to do more investing in the areas that are presently within their own comfort zones before they will start to look further afield. But I would invite either of our bankers who are in the room to respond to your challenge, if indeed either should so wish. And as neither has put their hand in the air, I shall assume that they are happy to remain silent. Sir, the question here. Please remember to tell us who you are as well. There you go.
Hello, my name is George Fragakis, and I'm from Greece. Since we are discussing the prospects of West Africa and other, well, unstable areas, what is your idea? Yeah, whatever, you know. Yeah. What is your idea of the areas that have been affected by the Arab Spring? What are the prospects in these areas? Thank you.
Okay. I think one of the gentlemen on this panel who has probably more hotels affected by the Arab Spring than most companies is Hilton. Patrick, how have your hotels fared, and what's been your experience in the last year?
I think David alluded to it earlier. Hotels typically will be around for 30, 40, 50 years, particularly full-service hotels. I think if you look at all our hotels, you look at our hotel in Nairobi, which is opened in '68, and you look at the history of Kenya in that time. You look at the same in Addis Ababa, our hotel there, which is nearly 50 years old. Hotels go through cycles. They go through cycles that sit through the cycle in the country, political cycle, and to some extent, as David said, they're apolitical, so they survive through. I think the Arab Spring has without doubt had an impact on hotel business, but it will come back. You took Greece, it's had a huge impact, but it will come back. And I think ultimately what you're looking to do is to make sure that during the times when it really is difficult, that you're doing everything you can to protect the asset, protect the condition of the asset, to make sure that it doesn't fall into terrible disrepair, but also depending who the ownership entity is, protect the ownership entity. And certainly in North Africa, there are hotels that the ownership has changed and will continue to change, I think, during the last couple of years. But I think those markets won't go away. They'll go through a slowdown, but they'll come back. And in many respects, they come back stronger. It's just a question of how long. I can't answer that question. It's a question of when. And other markets benefit from those changes. I think Dubai has benefited enormously in the last 24 months from the unsettled North African.
Muscat, the same. The whole of the Gulf area. I was just looking at some data with some clients yesterday. And we were looking at individual markets. Dubai occupancy has been well maintained, and room rates are also rising there. Abu Dhabi would have done, but they've had more hotels coming into the market. Muscat, again, growing occupancy and room rate there. Kuwait, I was defining what a cartel was yesterday. For those of you who are unfamiliar with Kuwait, Kuwait has sailed on. So that part of the world, Saudi Arabia, again, the hotels are doing relatively well in comparison. There are some unfortunate cities where the Damascus hotel scene has taxed.
My idea was mostly on areas where there has been a violent turnover. It's not just, like North Africa and Syria and these places. Is there investment opportunity anywhere near, or?
If you go back in history, this is the time to invest. Best place to invest in Lebanon right now, Beirut. Got to be a great place to have a hotel for the future, Syria. In the old days when the hotel companies had the capital, which they don't anymore because mostly hotel companies don't own hotels, almost universally, not quite. They look after other people's money. They would have put hotels up in these places. I mean, no one answered your question, but if I had sufficient money, the one place I'd put a hotel right now is Beirut. In 5 or 10 years' time, this is going to be the Paris of the North again. I'm not clever enough to tell you when, right? Probably at a time when certain other parts of that region might be having their own Arab Spring. You need enormous courage to put up a hotel in a troubled area. But history tells us that most of the hotels that were put up in the world were in troubled areas when they were put up, and you need a different kind of capital and different kind of financing and enormous courage, and you don't always have to build the biggest hotel in the world too. Some of the biggest hotels in the world today started as 50 bedrooms, and 100 years later they're 500 bedrooms. It's easy to have that courage than it is to put your money down on it. But I have absolutely no doubt that the first people in Egypt already had a lot of hotels before its particular Arab Spring, but most of the other countries that are going through the crisis at the moment don't.
Libya?
Absolutely. I mean, we've been looking at putting hotels in Libya for years, and there certainly will be the market. I think there already was the market, right? But there were such political fears, and this is not a political discussion, that rightly or wrongly, those political coercions put most people off from investing. They were just quite simply too scared, or they were shot at and went away again. It's not quite like, looking for gold and looking for oil, but it isn't very dissimilar. The first people in with decent hotels into these capitals, particularly remembering that they take 3 or 4 years to build in most cases. Not everyone builds as quickly as the Turks. This is not a Greek-Turk competition, by the way, just in case you were worried by that. I think there'll be enormous returns to be had for those companies or venture capitalists that do put up the first decent hotels, and you can start with a boutique. You don't have to start with a 500-bedroom door conference from Hilton. You can start with a 25-bedroom boutique hotel, which might be more possible.
Thank you.
I would build a 500-room Hilton, David.
Good luck with the financing.
Yes, please. Tell us who you are.
Good morning. My name is Yannis Ikonomou, and I'm a hotel owner and developer from Crete, Greece, another Greek. And thank you very much. It's a great session, and it's a privilege to be listening to such a panel. Since we're entering the juicier part of the session, if you could give us, I know it's hard, but if you could give us, continuing your thoughts, maybe a top 5, top 10 of your preferred short to medium term destinations for investments. You mentioned a couple of countries already, but I would be very interested to know some others in the greater European region, including the Middle East. Thank you.
Does that include using other people's money?
Absolutely.
Okay. Arthur.
Well, it's extremely difficult because it depends on the type of money that you're talking about. I mean, the vast majority of money that is invested in real estate from around the world is driven by the very large pension funds, insurance companies, and other pretty conservative types of investors who are looking to match their future liabilities, their life insurance policies, or their pension liabilities with a stable income and a stable return, which is why you're seeing at the moment that if you look at the global transaction volumes and so on, where the majority of investment is taking place is in the very large, mature, transparent markets where money can be moved in and out very easily, and that is going to remain the dominant source, whether we like it or not. The amount of capital that there is around that is in these funds is going to continue to be a major force for many decades. But there is a lot of other types of capital out there. You've got the emergence of private equity we've heard about. You've got the emergence of some very large sovereign wealth funds that invest for economic but also for some political returns. And you've got a lot of entrepreneurs out there, ultra high net worth individuals and so on, who invest all over the place. So again, it very much depends on the type of capital that you're wishing to place. I mean, so if you're looking at the more traditional capital, obviously they're looking for prime assets in markets like London or Paris, where we're seeing a lot of activity, a lot of investment demand. Any asset that comes to the market, even development, can be financed at the moment, and you can get not spectacular returns, but in relation to the returns you get on bonds, the return you can get on equities, particularly in the current market where equities are very volatile. Secure long-term real estate type investments are very attractive. So that we've heard private equity, and there is plenty of private equity out there that is looking for superior returns. That's what they're there to do. And sure, most of that private equity money is driven by these funds, but they put a small proportion of their total fund into that type of investment to seek those higher returns. And yes, they will go to markets where they can get the kind of returns we heard about earlier, and I would suggest that in a place like Africa and markets in Africa, they'll be looking for more than 18 to 20%, probably 20% plus, but no, that is, and there are some fantastic opportunities, as we've heard, in some of the more challenging markets out there, that if you're prepared to take that risk and get into the market early, Luanda is a very good example in Angola. I mean, some of the hotels there, and even in Accra in the last couple of years, those early movers who moved in there and are getting rates of $300-400 a night and 80% and 60% profit margins, and are getting repaid on their investment in 3 or 4 years. So they're easily making 20% plus. So I think it's...
Just listening to you talking about Luanda at this moment, well, I'm having such difficulty getting a blooming visa to go in there. So if anybody's got any swing with the government in Luanda, get them to be a little bit more receptive to people who actually do want to visit. But there you go. I'm sure the British government is pretty guilty with its visa policy on occasions. Great answer. Great answer. Do you want to add something?
I'll give you an answer to your question. My 5 favourite destinations. Number 1 is London, and number 2 is London. I will give 3 more, and the reason quite simply is over the last 150 years, in pure real estate terms, London has given the greatest return for a retail investor in hotels. Full stop. Good afternoon. It's always full. It always gets a high room rate. It suffers no real interference except for the Second World War, but then they fill the hotels with troops anyhow. Consistently, it has had the highest RevPAR than New York or Paris or any other city in the world. So you're after a solid real estate investment. London in Europe is certainly, possibly in the world, is the safest place to put your hotel money. 3 other destinations that I would fancy would be Beirut, which is kind of in Europe. Depends from where you're looking, really. Yeah. Tel Aviv, which is vastly under-hoteled, in my opinion. And oddly, although there are a lot of new hotels there, Warsaw. 5 bets. The first 2 are certain. The other 3 perhaps a little more risky.
Go on, Patrick.
I'd split this answer into 3. If you look across Europe, about 30% of hotel product is branded. In the US, it's the converse, about 70% is branded. We've seen consolidation in the last 5 years. We'll continue to see consolidation. So I think there's a real opportunity to buy existing real estate from this man on my left at significantly discounted prices. He won't like that, but if you can buy at less than replacement, and there are many parts of Europe where you can do that today. You talked about Spain. If you're prepared to take risk, you can pick up some stunning real estate. Depends how long you're prepared to wait in terms of that real estate being successful again. I think the second answer is more about a sector than a country. I think focused service, what we would call the mid-market sector, I think in the hotel business has long been ignored by the European business. There have been some brands that have been successful, but many opportunities to build really good mid-market hotels. You don't always need to build 500-bedroom meeting hotels, to David's point, but neither do you need to build a 25-room boutique. 125-room mid-market hotels, I think in many parts of the world can be very successful. In terms of markets, David's absolutely right about London. I'm going to Warsaw on Thursday, so thank you for the plug, David, to announce a 300-bedroom Hampton that we've just started building in Warsaw. David's absolutely right. You can never look past London, although there was a deal when I was in Hilton at one stage where David said would never work. It's been very successful in just over in the South Bank, but I think the south of the river has now become a very, very viable destination. Many people said wouldn't work. Certainly we've seen that, and I think some of our competitors have seen the same. In terms of hot markets, my hot market is many parts of Africa. Massive opportunity, no supply and rising demand, but it's risky. Many people have poured their money into China. I think Africa's been ignored, and I think there are many parts of Africa with real opportunity if you're prepared to manage the risk accordingly.
And just to add my two pennyworth, and I saw half a hand going up there. Good. We'll get the microphone to you while I'm just answering the question. I definitely agree with the London, and actually I'd put Paris in there as well. Anywhere where you've got high barriers to entry, I think make great investment opportunities, and Paris and London have huge barriers to entry, as we've heard already, with planning regimes and so forth. I've got a particular fondness for the Côte d'Azur. I'm not saying flood them with new hotels and whatever, but if you have the opportunity to buy a hotel down in that part of the world, I don't think you'll have difficulty making money, providing you're a good operator. I agree on the sort of select service, whatever you call it, limited service, the branded limited service sector. And the one thing I would throw in, two things that I would throw in where I think there's a lot more to come out over the next year or two, and certainly an area where I'm finding I'm doing a lot more work. One is in service departments, and I don't mean the hotels that are pretending to be longer stay. You know, long stay is 3 to 5 nights in those places. I'm talking about the stuff that's 30 to 40 to 50 to 100 nights on average. There's a completely different market out there. It's the same companies that hoteliers traditionally go for, but it's different people within those companies that deal with the sort of the long-term housing aspects. So there's some good money to be made there. And the other thing is in terms of hostels, or hotels with the word S in square brackets in the middle. These are properties that are traditionally at the lower end of everybody's spectrum and off most people's radar screens. We're seeing some very interesting developments of new builds that are 4 to a room, 6 to a room, 8 to a room, or just 2 and 1 to a room, mixed in terms of occupancy, if people want that. Completely surprised me, I tell you. But I'm finding that there's a lot of interest in that sector, and boy, do they make money. Right, where's the microphone?
Yeah, sorry, to take it back to sort of the technical side of things again. I guess so far you've been focusing on the best locations to actually place hotels and the difficulties of actually financing them and retaining some kind of cash balance to keep them operating. I think one of the fundamental things that I think we're still overlooking is actually how to increase RevPAR. I mean, as far as my company is concerned, we're looking into actually how in-room technologies, especially making the most of smart media, so whether that be the in-room smart TVs or apps that customers can take away, and actually thinking, well, as soon as the customer leaves the hotel, whether it be other restaurants, shopping destinations, these are all monetizable options. You know, there's partner opportunities there. As soon as the customer leaves, I mean, you're losing revenues. I mean, my question would be towards Patrick, I mean, how seriously are you taking the technology side of things, and you know, what elements are you investing to actually increase this RevPAR?
Let me give you a light-hearted view on that. I mean, I think we're completely. I completely agree with, you know, technology is going to continue to change our business. I went to the Waldorf, lucky enough to go to the Waldorf Astoria Shanghai last year, and they really have taken the use of technology to a new level. Because when I walked into the bathroom in my room, the lights came on and the toilet seat lifted up. And that's the sort of technology that's available. It's about how you use it cleverly.
And you were only there to throw up.
It's amazing that the room was intelligent enough to actually identify what it was I wanted to do in there. And I did what I was just brushing my teeth, not in the toilet, I hasten to add. But I think that it's about using technology to your point, is to either to retain customers or to drive the profitability of your business. Because the challenge is in, you know, people will tell you hotels make broadly the same amount of money they did 20 years ago when there wasn't technology as they do today when there is technology. It's about how you use that technology. And the reality is sometimes some technology you'll just stand still with it, and you have to recognise that. But it is about how you can intelligently use technology. But it ultimately goes back to your interaction with your customers. If your customers want to come and stay with you because you're delivering what they're looking for, then you're onto a winning thing. If they don't, then you're throwing money away.
Can I just slightly go off at a tangent on where you were heading with that point? Because I think one of the things that perhaps we ought to briefly touch on before we hit the gong at 12 o'clock. We all in the hotel business call them food and beverage facilities. Actually, customers don't actually do that. They call them restaurants and bars, and somehow we call them food and beverage because we think that groups them together. But I think one of the real failures of the hotel business these days is capturing more money, not always from our hotel guests, our overnight guests, but from external people, and turning our restaurants and bars into destinations that people will feel comfortable and indeed positively inclined towards visiting. And one of my gripes at the moment is that hoteliers don't do enough to make those real revenue earning opportunities. They tend to focus on somewhere for people to have breakfast, but that's not really going to make all the money that you can. And I don't know whether there's a technological answer. You talk about tracking people, but I would certainly encourage hoteliers to really get real about turning their restaurants and bars into focusing on the external customer, and then once you've done that, get your guests in-house to come and patronize the facility.
Just to be difficult, talking from very practical experience, there is not a single piece of invented technology, not one, that has made hoteliers a single penny they weren't making in the first place. Not one single invention. I was privileged enough to sit, I still sit on the board of the Savoy. We spent a small fortune making it a physically pleasant place to be. Some of you will have been to the Savoy, the new Savoy. And we put an awful lot of technology in there. And I sat with the GM and compared the opening to the original opening in 1871. And we tried to decide what difference there was for the manager who did it in 1871 and for the manager who did it in 2007. And the answer was absolutely none. And I'll tell you why there's none. Technology will be invented, it hasn't been yet. Is because the first 5 things the customer wanted in 1871 from the hotel were identical to the 5 things they wanted in 2007. You pick your own, but they will include location, friendly service, clean, quiet room, nice staff, a decent somewhere to eat if you're in the Savoy. They haven't changed. It's what everybody does who picks a hotel, regardless of the star category they're picking for. And ever since they booked Jesus Christ out of Bethlehem 2,000 years ago, the prerequisites for people staying in hotels haven't changed, and technology hasn't made any difference. We also noticed that in 1871, a chambermaid did 13 bedrooms in the Savoy. How many do you think they do today? Anybody want to take a guess as your final leaving question? 13. Hasn't changed. 150 years of technology, chambermaids do in the Savoy the same number of bedrooms.
Very good. Very good. We're into the time. Go on very quickly.
What do you think about investment from the Chinese into the European hotel industry?
I was in China last week doing exactly that, talking to a broad cross-section of investors who are looking to invest offshore from China. I mean, yes, there is strong interest, primarily to diversify out of their own markets and in particular into hard real assets. So yes, I think they will be a significant investment force, but they have their own approach and expectations in terms of returns and so on. So I don't think it'll be as big a flood as people imagine it might be. I think it'll take time, but what is clear is that from our perspective, the depth and range of capital out there is increasing all the time, and the number of investors and the types of investors and the sources of capital from a geographic perspective are increasing and broadening out all the time. So there's actually no real shortage of capital. It's just really making sure that you have the right investment opportunities that appeal to whatever segment of capital that you're trying to chase.
I think, if I may just add, I think of more interest is actually the Chinese traveller. I think that's will have far more impact on our business. We launched about a year ago a program called Hilton Huahing, which is a welcome package which we now have in 70 hotels, Mandarin speaker in the hotels, a variety of foods available, local dishes available, etc. In the first 7 months of this year, the hotels that ran that program have seen a 130% increase in Chinese travellers into those hotels. That is going to change the hotel business in Europe more than any other single market. And I think it's about being ready for it. Many of us learnt that back in the 80s when, and particularly, there was more travel out of Japan. But I think the Chinese impact on our markets, for those who are ready for it, is going to be really, really exciting.
Okay, ladies and gentlemen, with your permission, I'm going to keep us here for another 5 minutes. Is that okay? Okay. There's a lady here with a question, and then I'm going to ask a final question of the panelists. So,
hello, Elena Murano from CaixaBank in Spain. I just want to disagree with Sir David about the technology thing. I think wireless internet is one thing that has made clients decide to go to your hotel rather than other hotels, you know, with regard to what you were saying about the Savoy.
I agree with you entirely, but that's the same as television. When I started in the business, no hotel had a television, and you wouldn't stay in a hotel without a television. So people put televisions in. I remember when originally they built hotels without bathrooms, and as soon as we had a bathroom at home, they put them into hotels. So of course you're right, but I think the same as you'd expect a bathroom and a television today, you would also expect to have internet. It's only if you haven't got one that you wouldn't stay. Does that make sense? So we agree.
Excellent. Nice. Okay. Don't like to part as enemies, of course.
No.
Okay, Patrick. First of all, you, then Arthur, and then Sir David. I don't want anybody here feeling that they haven't had the benefit of your wisdom this afternoon, and therefore I go back to the original topic. What initiatives should hotel investors and owners be undertaking now to stay ahead of the game? I want you to give me one initiative that has not been mentioned already that you would earnestly recommend hotel owners and investors to undertake. So what one initiative, and you have precisely 12 seconds each. Patrick.
From when we start? Ultimately, you can never ever be too close to your customer, which I said up front. But once you've done that, you have to manage your cost, every single penny of your cost.
Okay, thank you, Arthur.
I think that coming from a real estate perspective, not enough capital is being invested in the maintenance and upkeep of hotels at the moment. People are under a lot of pressure. They tend to put that to one side, thinking that it's not going to be an issue, but when you do need to exit your asset at some point in the future, if you haven't maintained it, it'll be a very expensive factor to put right, because any future investor in the hotel will take into account all the money they need to expend in the property going forward.
David.
If you're courageous enough to own a hotel, you're not a hotelier, almost certainly. If you do that, make sure you have someone between you and the flag who is.
Okay. And my last word on the subject is we all have the benefit of two eyes. As Arthur has said, and as Patrick has said, you need to keep your eye very firmly focused on the physical side of your business, and on the customer side of your business, and on the operation side. So that takes care of the two eyes. And in a time of economic difficulty, as many of us are, that's absolutely vital and important. But you need to use your third eye to keep an eye on the future, because if you don't have that one eye keeping an eye on what's to come, then you'll fail to take advantage of an upturn when it comes. Ladies and gentlemen, thank you so much. Patrick, Arthur, Sir David, thank you for being such a wonderful audience. I have to say, the three of us were probably far more pessimistic as to the numbers that would have turned up for this.
There's four of us.
But the four of us were far more pessimistic. Numbers obviously not my game today.
You can see why he's a successful consultant.
Absolutely.
He wasn't counting you because you're a competitor.
Anyway, thank you so much. Thank you so much for being with us. We've had a lot of fun.
Ladies and gentlemen, if I can also add my thanks to Russell for chairing what has been a very entertaining session. We could have sat here for at least another hour or two listening to the four panellists. So again, if you would thank them very much for their insight and their wisdom today. And thank you for your attention and for being here. Patrick mentioned the importance of the customer, and just to let you know that two of the sessions that we're running tomorrow are one on customer service and is customer loyalty still a factor for the future, and the other one is on marketing and branding and how much that influences customer decisions. So please do come and see us tomorrow, and we have another session starting in about 20 minutes on security and risk management. Thank you again for your attendance.